Good afternoon. Welcome to OptionsTender. It is Thursday, January 23rd, 2025. Welcome, traders. I want to go over some of the big picture looks at this, and I want to combine that with a couple of old videos that I had done in the past. We had looked at the recessionary targets. Now I can adjust those by a few points. We had looked at what would price appear to be on the daily time frame if any of the larger degree recessionary first initial moves had happened, and I diagrammed those. And so we're going to reposition those and look at if this truly is a top, which I think probability-wise it is, then we're probably going to see some of these larger moves. So we're going to spend some time on the monthly time frame and then move down to the multiple analysis to where we go to the other indices, and we'll just kind of roll through those quickly. Okay, so we're using SPX. By the way, we're doing this intraday noon Eastern Standard Time. If you want to get these videos intraday, consider becoming a 99-cent member. We have an individual membership as well, which we just did a Tesla video. So every once in a while, I like to throw those in there if you like those individual names. And I would take requests as well. I haven't put that out there, but for you individual guys, if you want guys and gals, and if you want individual names, I can do those accordingly to the time that frame that I have that I dedicate to YouTube. Okay. All right. So we have SPX on the monthly time frame. We have 1929. We have 2000. We have 2025 top. And I say that now because we made a new high here in January. So what we're looking at is if we do get this major top, what kind of degree are we looking at? Well, first of all, I think it's this move that we're alternating here. So I think this is all one completed wave 3. Now, surely this can extend, and we'll talk about this. Well, let's talk about the more devastating situation first. So if this is what we're mimicking here, this is a wave 2. Then what we're going to get here is a wave 4. This wave 4 could clearly match up with this downtrend line here. And where does that take us? To the 62% retracement. Now, I think that is a very good situation. I don't mean good as in, for good for people. I think that this is a probable situation. And how I'm looking at this, and price action has to tell us which of these is going to happen clearly. So I believe that our first recession, very similar to this here, like a flat pattern, for example, it will be a large move. And I'll show you, I'll compare these, will be a large move down, very similar to 2000, perhaps another flat pattern. And we can get a longer, maybe this is a expanding triangle where you have an A, B, C, D, E, and it can go the opposite way as well. We can get our initial move as a large move, and then A, B, C, D, E, where it's very time consuming, and get us to the trend line in time. Okay, so wave 4s, you see wave 2 is very sharp. So our rule of alternation should say, this one is more time consuming. Now it's still going to be a large move, but what I'm thinking is that our initial wave is going to take us to maybe the 382 or the 50% retracement, very large move. And then we get a good 2-year bounce. You can call that a bull market within a bear market if you want to, however you want to explain it. And then we get a larger move for a C wave down to that 62% retracement. Okay, that's looking at a big picture if this is the case. All right, so let's dig in just a little bit further. So this move here in 2000, the initial A wave, this is a flat pattern. This is an A, B, C. All right, you see A is a little bit more choppy. It's an ABC inside of there. And then you get this one being a little bit more like relentless, but not fast. So you get an A, B, C. And then you have a 5-wave impulse where this one was pretty devastating. You see the large red candles there, okay? So this initial move, not really looking for a devastation, but it's still gonna be a pretty large move, okay? So if we compare this, we have about 33, and this is a monthly time frame, about 33 monthly bars, trading bars. That takes us at about 50%. Okay, so that's nearly, let's call it 2.5 years of decline. It's a long time. Your average recession, and there's different ways people classify these recessions, 20% retracement, things like that. But your typical would be 18 months. Okay, so let's start off with the larger one. Let's kind of compare this to now. So if we take the same move, well, that's not going to do us any justice. Let me re-up this one. Let me redo this from this point. Let me duplicate this, and then, okay, so we have, let's go out 33 bars. And that takes us, let's do about 50%. 33 bars, about 50% retracement. Okay, that takes us right to the 50% retracement there from the information that we have on SPX from low to high. That's about 50%. So if we get this move, that could be an initial move here. Maybe we get some sort of 2-year bounce or so, and we talk about retracements and all that. But I'm really just worried about this one. So if we're very comparable to 2000, that would be our move right into the 50% retracement at 30.52. Okay, that's going to be approximately 305 on SPY. And then I think some sort of large degree bounce, maybe a flat pattern, like it could even expand. It can be lower, higher, and then you get a larger move to the downside to the 62% retracement. And depending on how much time it takes, you know, I think the lows are going to be somewhere in 2030. Okay, so maybe this isn't the way it initially moves. There's different ways this can happen, but I think the lows, wherever those lows might be, are going to be in 2030, and I think this trend line will be there. Okay, so we don't know the future. I'm just kind of guessing. But what happens if we have a 2000 retracement? This. Now, what if we're a lot more conservative? And this brings us all the way out to, my gosh, 2028. That's just a huge move and decline. And maybe that's it. You know, maybe that's all we get and we go to new highs from there. So a lot of maybes, but we need to see price action first, and then we can start determining everything after. Now, what if this just isn't the case, okay? We're up here, but we still have higher prices to go. There's other ways this can happen, and you know, I took the retracement. These retracements go from high to low way back in 2029. This one here is just an extension of this last move. So I think this move is just about over right here. So what if we just retrace, and that now becomes an extension where we get this as a wave 1, we get a wave 2, 3, 4, 5, and so on. Okay, so that would bring us down to about the 4,500 area. That's the 62% retracement. That also, no matter what happens, I think we're going to get a good bounce off of this area there, and we're going to have to make decisions, because that's the, if you see this equilibrium here, or AKA triangle, that's where volume is. That's where a volume node is. And I think price will have trouble getting underneath there at first. And so we'll see either highs or a bounce off of there. Okay, this is huge picture. This is going to take plenty of time. Now, this is, what do we have here? Now, this is your typical, this would be your typical 15, let's move this out. Your typical 18 bars. So let's call it 18 months. That would be your average recession right there. All right. So at minimum, I think this is what will occur. And if this is the case, this could be a zigzag. You know, if this is a 1-2, this could be a nice 3-wave zigzag, pretty sharp. You get this done in 18 months. That would be 2026 into June or July area, and then we start moving from there. Okay, but it's still a large move, and there's still going to be some damage done. It's 26-27% there. Okay, and there's 786 underneath there as well, so don't think that's where it has to stop, but this is right in the zone where volume is. So I do believe this will stop at the 50, 60, possibly even lower to the 70%, which would take us, I can add it on there actually. And that'd take us all the way down to 4,000, which is a great support area anyway. Okay, so that would be typical, 18 months, 30% or so, and then we go to highs. But maybe this is just the beginning of some other formation that, we get the initial move, we get a bounce, and then we go much lower into 2030. Okay, that's what we have to pay attention to, is if what's going to happen. We get a nice deep retracement. We get a bounce that takes a year or so, maybe 2 years, whatever the case is, and then gets a sharp move down to the 30. I'm looking at down here, 2030. Okay, but here's what we're initially looking for. Large move. I know I'm repeating myself. Let's go ahead and move on to SPY. And let's just go ahead and go to the monthly time frame. Look at SPY. We're right back into the trend line here. Bounced off the 8 EMA. I don't think that's going to last next time. Weekly. On the weekly time frame, filling out that wedge a little bit more. We're right back to that wedge top, or trend line top from 2008 and 2021. We have a few points left. We're looking at about 609, actually exactly 609.07 is the former all-time high. We're looking to get above that now that SPX already did. I think we should do that possibly into today, tomorrow, whatever the case is. Doesn't really matter. Looking on I'm just reviewing this really quick. I really wanted to get to that higher time frame, but now looking at where we get these time price relationships. So beginning of February, maybe price keeps going. Maybe we grind up here and we're forming a top, and the beginning of February to the middle of February is this time cluster. All right, that's where I think we make a big reversal, whether that's higher, and I'm not going to take out the fact that we could get a low in it as well. Okay, and so that's where these start coming in. If we get a high up here, I have this one being very similar to 2000. All right, and so that's a 15% move here. I'll have it at 15, and that takes us right into this 127. But it's done in, I moved it 4 bars. Okay, that's 4 weeks, 1 month of a move. All right, we get a little bit more precision in the daily time frame. So let's move there, and a better visual as well. And that would take us right down to the bottom of this wedge. We're forming a big old wedge here that we broke down, back tested, but that's still one move. Maybe that's an A, B, C, or something like that. Whatever the case is, we should test the bottom of that wedge. Okay, so this is typically this move here. We're looking to just eke up just a little bit higher, and I actually put a couple of example recessions here. 2000 would be the least steep, and that was a 14% move down into that support zone that we continue to talk about, and that would be getting to the bottom of the wedge. Sorry, that's a copy. My wife's printing some stuff out there. We have 1929 initial move was insane, 44% move down in 34 days. All right, 34 bars, trading days. So this was 16 trading days here. 16 trading days we got to these. So I wanted to bring these up. I had them at this high here, and clearly that did not pan out anything near what we were talking about. And so that should have been the first clue that we're going to new highs, but I was very skeptical. Anyway, I'm always skeptical of these when we have weekly, monthly, daily divergences all over the place. It's really hard for me to get bullish. So this was I believe the first move down, the wave one of the Corona crash, or the A wave, whatever, it doesn't matter. It's 5 bars. It took 5 bars to get to 15+%. It's 5 trading days. That was an insane move. So these are very large moves. It doesn't have to be like that, but I want you to be ready just in case price really starts to break down onto something like that from the high. That's what happened. Okay. So let's go to time and price and fibs. So we're above that 786. We gapped above it. As soon as that happened, that was our final target. We talked about that in 2 videos ago. That was our final target. We gapped above there. That's no longer, we're not looking for retracements anymore. Again, I'm placing this above. Now we have our cluster here from tomorrow into Tuesday is our cluster. So I'm looking for a reversal into, it could start tomorrow. It could, maybe we gap up tomorrow and gapping crap, follow through Monday or so. But if we still grind to the upside, then I'm looking for something like a turnaround Tuesday or so. So anytime from Friday to Tuesday, we're looking for a reversal, a top in the market. That's what this cluster is telling me. Time and price, really pretty cluster there. All right, and then going into February, we'll have a couple more time and price relationships happening. Beautiful, beautiful clusters happening in here. So right now we're looking for a top. And I think that's what I'll name the video now. And so this being an A, B, C, or 1, 2, 3, 4, 5, doesn't matter. Our 5 is coming over. We just keep moving them, right? Keep on moving. Now, the difference is, and I have to show you, this is exactly what I was talking about in last video, is we have the 21 top. So I can't even get to it. So it's worth bringing this back up, because in the 21 top, we made a top here in the tech market, and SPY made a new high. Okay, so that'll give us a good point to go to QQQ on the daily time frame. And same thing here. So tech made a high here, made what looked like a corrective move, right? That's the same situation we're in right now. This looked corrective, but made a lower high. Okay, so what makes this corrective? How can we still have this be an impulse wave and move down? Well, this would be our wave 1. And then you get an expanded flat A, a lower B, then the wave 1 into a C impulse move. And you can see how impulse this is compared to the rest of the move. So that would be a wave 1. wave 2, and then you get to the bigger wave 3s. Now, there's other ways to do this. If this was a leading diagonal, you can count this. It doesn't matter. ABC into 1, you get the retracement, and ABC into 3, correction, ABC into 5. So there's many ways to do that, to count. And right now, pull out there. Right now, we're looking at this being a very corrective looking move. Okay. So is this, and I do think tech may have peaked here for a lower high. Okay. And so what I think is we're getting A, B, or this is a 1, 2, 3, 4, 5 leading diagonal. Either way, it looks corrective. And we're getting a wave 2 pullback, no matter how you count this. I think it's a wave 1 here because that looks impulsive. And then A, and then a 3 wave down for B, and then your impulse C. It's expanding flat. Okay. And with that said, we're rejecting off of the 786. Now, it looks, that's if you're counting this whole thing as a wave 1, and that's fine. It really doesn't change anything. But if that wave 1 is here, now we have our zero line a little bit higher, and we're still retracing off the 786, but it looks cleaner. It looks like a cleaner rejection. All right, so I think this move is done. We'll see what price action does. We have earnings. We have all sorts of stuff happening next week. And so that will be crucial to see what happens going into next week. And so that's also a good reason to, maybe the market grinds into Tuesday and to some of the tech earnings and some of those, all sorts of things are happening. So we'll talk about that. We'll post it in the Discord. While we're on the daily, we might as well go through some of these names. And SMH so far is doing what we talked about yesterday. So with this initial wave 1 here, we had this massive complex wave 2. Okay, so this was an ABC into a larger degree A, ABC into a B, and then we had this choppy, I can't believe I finally worked it out, into a C wave where this is expanded ending diagonal. Expanding ending diagonal. See, it gets larger. These moves get larger as it goes. And here's the top of our triangle, our wedge, and we broke down from it. This is also our bear flag. Nice geometric line there. Broke down from there. So we'll see where this goes. I think this did peak, but we'll see if, maybe it wants to close the gap and you get that. This is a classic throw over right here, but then maybe you get that throw over and we'll see where price goes. I think we're near the top. I think tech has peaked and we're going to head lower from here. And you can look at more in detail in yesterday's video. IWM. We had this one, still could go higher. We talked about what would happen if it broke from higher. We have the 50% retracement, fib retracement from high to low. So that could be done, or maybe it wants to go to 62. But I think the IWM doesn't look like it really wants to be the leader at this point in the market. And very similar to like 2022, 2000, things like that. I pointed them all out. This did not want to bounce heavily after this initial move to the downside. It just continued lower. Okay. So big picture, we're still looking at this being an A, a B here, and then a C much lower. Could be the 100%, could be whatever. We have our extensions out here. I'm not looking at price targets right now, but just a large C for this to be the first degree A. And then we have the rest of the market, whatever it wants to do. We'll talk about those later. Depends where the rest of the market's at that time. So that one, we're looking at a 1-2 setup and wave 3 to start. And so this is very similar to the DIA, the diamonds, okay? You see the diamonds pushing up to the upside, and that's kind of helping SPY move and maybe get the few points that it needs. But that would be just a back test here of that channel. So this doesn't have a whole lot more to go. And then the diamonds quite possibly could be setting a lower high as a 1-2 setup and then heading for wave 3, which should be much larger move. Let's go to the VIX. VIX on the daily time frame, back testing that downtrend line, and it's very volatile, index. So it clearly is broken through the line. It could break back up. We're looking at horizontal supports are a little bit better, but this is starting to break. It still has a low already, but maybe we make a new low. We have another support here at 14. If price breaks this low, now we have something that's setting up as initial move here, and then an A, B, C correction. We make a new low. Probably have a positive divergence, but still the breakout from here, and then a correction. And then I think this moves much higher. Okay, so keep an eye on VIX when you're looking to see if the market is actually turning around. The VIX started off positive today, I believe, and is now breaking down at this point. So what we'll do is go through these indices on the 65 now, since some people want to see those. So we have SPY forming this bearish rising wedge, held on to the bottom of this wedge. I think it'll eke out a new high here with the divergence. And in this direct move to new highs can only lead us to really two situations, okay? We'd be looking at this initial move here. We get a divergence in the weekly, in the daily time frame, new divergences, and even on the 65, we'd be looking for even a small divergence, and that really helps here. This next move, we'll get a divergence here and even start to form one here. So we would do this, and that would set us for a possible end of this bearish rising wedge. And at that point, if we don't make a new all-time high, okay, 609.07, if we don't do that, then I think it's more likely that this is a wave 1, and then we get a wave 2, back testing this flag, getting to the 50-60% retracement, and then we go for wave 3, and this starts to extend. Overall, I don't like that. I think it's more probable that this is going to reach up to the all-time high, peak above, break down from the wedge, and this continues lower. Now in the low time frame, we're still going to look for that possible 1-2 setup, because we'll probably get a bounce and some sort of equilibrium anyway. And this will be our major trend line that we'll be watching to break. ES. All right, ES has much more to go. We have about 3 points on SPY, 2 points, excuse me. But overnight, this action can happen as well. And I'm not even sure that ES really has to get an all-time high because of the contract changes, things shifted back and forth. I don't know if that's an actual rule. So I'm not too concerned about this, but we're into resistance with this volume here of trading. And we'll see, we'll probably form, and I'll look at this on the 4-hour time frame. If you look at the indicators and things like that, it best matches. So we'll get this divergence coming up if and when we start heading higher, at least above this high here. But I'm not going to put too much weight on if ES gets a new high or not, because it with these contract changes, it changes everything. So with ES, then we have SPX, and I love charting SPX because the lines are so clean. These lines are are perfectly through because it's the cash index from anyway, just clean lines. And so we already got a new high here. I do suspect that we're going to eke out a new high with SPY unfinished. And same thing. We have our major trend line right here. We have this nice sharp move, divergence. We already have the divergences on the weekly time frame here. So this is kind of setting us up for what is to come on SPY. I don't think we really have to go through everything again. This is QQQ. There's that 786, nice retracement off of the initial move here. An A, B, C, right back into the 786. I think this is a lower high. I think this is done. VIX, and then we'll end this. And also, you know, the treasury rates. So here's this wedge forming here. We made a new low, so I can expand that wedge. All right, but this is forming a positive divergence there. Again on the RSI, another one. I think this is almost done. We're probably going to reach this options expected move. I think that we're so close to there. We'll probably reach this because I don't suspect that tomorrow we'll make it past the midpoint of the options expected move. And I certainly don't think it's probable that we make the other end. Once you reach one end, it's just not typical to reach the other end of the options expected move in 1 week. Now, it has happened. It's just not probable. So we play a game of probability here when we're trading. And so I don't take that into, I take it light that I think this will spike up tomorrow, being Friday. We'll probably get free Friday, which will drive this even lower than the options expected move. It might even, here's our low that we're talking about in the higher time frame, and so it could take us all the way down to 14. We do have a support there on the daily. I don't have it here on the hourly, but if this really wants to drop, and I can't really see that happening, but it has, then we have more support here and a gap that's left open as well. All right. Also, just want to point out the rates here. We're getting a bounce on these 10-year treasury rates, and I think that's natural. We have our impulse move here. Once we get the retracement, the huge gap, once we test the gap, get a retracement, the next wave down is going to be pretty relentless. So I think that's when the market would make a reaction, especially when we break down from the wedge that it says, uh-oh, we have to sell tech. And I think it's already starting to happen, but I think it'll accelerate at that point. And the small caps, it says buy, but what it means is just relative strength. So tech is going to be much weaker than the small caps, and I think tech leads the market to the downside. And I think this is going to be a very recessionary move after it's broken down from this wedge and accelerates. And maybe we get the bounce all the way into FOMC. I'm not sure how this is going to go, but FOMC is on the 29th. Going into next week, so that's Wednesday. Like I said, lots of catalysts happening, and then maybe we go up into FOMC, and then we get a big drop from whatever they say there, okay? So that's all. A lot of information there. Thanks for watching. A little bit longer video. Don't forget to like and subscribe. We'll see you in the next video.